Hello everyone, and welcome to the Concordia Annual Summit, specifically the Concordia Africa Initiative Strategic Dialogue. My name is Yinka Adigoke. I am the Africa editor of Quartz, digital publication that covers the new global economy. We focus a lot on the role of innovation and technology in development and improvement of lives on the continent. To get us started, I'm going to introduce Dr. Jabulani Mabuza, who's on the Concordia Leadership Council, just to welcome us and talk a little bit about what this initiative is about.
Well, Yinka, good afternoon all, and welcome. And thank you very much to all our panelists. This big debate that is grappling, or all leaders of Africa are grappling with, is one of inclusion. You would have young Africans speak about nothing about us without us. So, whilst there are many people that want to help in contributing to African solutions and Africans finding solutions, our young people in particular are insisting that they will be part of defining their problem, and they will be part of determining their solution, and they will be part of solving their own problems. So whilst they recognize they don't have all the answers, it is important that we're not going to be sitting in air-conditioned rooms, in some dark smoke-filled rooms, wooden panels room, ship out solutions to Africa. We will include them. So this issue of financial inclusion, given the various challenges that we have of skills, the challenges of poverty, the challenges of inequality in the continent, with our young population, with being about 50% of the world population in youth terms, the opportunities that we have with our legacy resources of minerals, they all speak to the need for technology, the challenges that Africa has of lack of electricity, but the opportunity, we have a lot of people in the telecom space here, the teledensity, the use of mobile technology has demonstrated both opportunities and challenges to connect and to do all these big issues of big data, data analysis, to make sure we don't still get trapped onto the Stone Age as the world is moving to the fourth industrial revolution. So the Concordia continues to identify those questions that are facing the world, particularly the developing world. So this particular initiative is in line with that. So the founders, both Nick and Matthew, and the entire team at Concordia have rightly identified that this collective around the table should come together and grapple with these issues, from data analysis to mobile money, to all those opportunities that are there with the technology to ensure financial inclusion. So Yinka, I'm looking forward to listening. Thank you.
Thank you very much for that. And yes, our topic is financial inclusion, technology, and data analysis. This is a topic that is particularly exciting for me because we cover this quite regularly at Quartz. We see the level of investment into startups and new companies that, particularly in the fintech space, and it's something that investors clearly believe in. I was just looking at a World Bank report that you might have seen, where it talks about 69% of adults and 3.8 billion people, the equivalent of 3.8 billion people have an account in the world, and that's, those financial accounts are both either banks or mobile phone accounts. And it's the mobile phone accounts that are really driving the increase in financial inclusion, because 3 years ago when the World Bank did this report, I think the number was 61%, 62%, and before that it was 51% in 2011. So technology is playing a role in bringing more people into the formal financial system. There's still a gap between men still have more accounts. I think there's a 9 percentage points gap between men and women. But sub-Saharan Africa is also, even as we say that that there isn't that much financial inclusion in poorer countries, sub-Saharan Africa is also the only region in the world which has mobile money use above 20% in 8 countries. So there's clearly something happening here. There's often talk, we use the phrase leapfrogging all the time, and this seems to be the one space where leapfrogging and African solutions, as we use as a phrase very often, is very real. It's really making a difference, and I'm excited by the people around this roundtable, because many of them have really great insight into the details. So I'll kick off with like the first kind of most obvious sort of broad question, which is just to look at so what, even while we say African countries, some of them are moving forward, there's still a lot of significant barriers to accessing financial services. So I'll start with you, Dr. Jabo, just to talk about the main reasons why this was holding things back.
Yeah, as I indicated, I think the entire world is currently consumed by the prevailing digital disruptions. And Africa is no exception, except that our socio-economic and infrastructural system continues to just magnify the constraints. The situation is improving, but there is a need to put in some context here. It is this legacy of poverty, unemployment, and my right of inequalities I've referred to. And the global capital markets, they further complicate our situation by creating barriers for financial inclusion. What the effect of this is it undermines the rate of business development and the promotion of entrepreneurship. Hence, the general development of the economics are that much limited. So against this background, we are anticipating promising systematic trends that we see the overarching force for socio-economic progress, with the key being the demographic dynamics and the technologically related trends in the long-term investment. So on the demographic fronts, we have the youngest population in the world. In comparative terms, we have the lowest proportion of total population with access to the internet, with about 18%, and the largest proportion of those being young people of between the age of 15 and 24. So whilst we hear that according to GSMA, there's more than 5 billion unique mobile subscribers by the end of 2017, mobile connectivity has demonstrated with our various topographic challenges in the continent, with vast distances and relatively sparsely populated communities, at least in the areas of need. Mobile communication offers us the best, whether it's by microwaves, by satellite. I, for one, continue to tell my colleagues back in South Africa that maybe copper is no longer in vogue, but for me, I don't need anything more than 5 MPTs. I can do just well with copper. So we've got to stop thinking that everybody is fiber able. We must be able to use technology that is appropriate for the appropriate need at a particular point in our lives. So therefore, the young growing population in Africa, I think, provides an opportunity for investment, but also an opportunity for growth in the ICT sector. So on the technology front, current foreign direct investment, the trends there would suggest that the capital markets are attracted to regions and sectors with high-tech opportunities. This further illustrated by the close association between high-tech applications and the growth of foreign direct investment. The above two trends are important insofar they interplay of a young demographic mix together with growing use of digital technology and the growth of the social media. So we continue to have the issues of bandwidth challenges, whether it's in the area of infrastructure and or indeed in the area of electricity and spectrum. So I would like to urge that we try and look at this as the quickest way in which we can bridge what President Mandela called the digital divide to get people communicating and also see opportunities in them.
Okay. I'd like to bring in the telecoms guys on this. I'll start with you, Rob, from NTN. To just talk a little bit, I read something you said at a conference the other day about the need for there to be lower tariffs on cell phones and to encourage, to make more smartphones available and more people would use phones for more things. So I'm including that in your list of barriers. What else do you see as the issues to getting more people online and using more services, including financial services?
Yes, I think if we start with the financial inclusion, I think what's so exciting about the mobile industry is in the last 20 years, we basically managed to achieve 80–90% of people have got a basic handset, they're making calls, and they've learned how to buy airtime and use a very simple menu then to convert that into minutes or SMS or data. And it is that system and infrastructure that we are trying to repurpose for mobile money. And that's why it has so much potential, because once you can say that 100 naira that got recharged is not airtime anymore, but it's e-currency, then we can use the network, the prepaid systems, the agent networks to allow people also to send money to somebody else. And these agents that were always accepting cash from people buying airtime can now also pay out cash if somebody has been sent money. So this is the exciting opportunity. The most important first requirement to take advantage of it is regulation, okay? Because we need to be able to call the airtime e-money, and that's why we need mobile money licenses. Okay. And in the markets where the mobile money licenses have been awarded to the operators, you've seen huge jumps in financial inclusion. And this has made a massive difference in the lives of everyday people. And it's so exciting because it doesn't need a lot, because the network is there, the handsets are there, the agents are there. It's just a nascent opportunity. So regulation is a key. And some markets, we still don't yet have the enabling regulatory environment to take advantage of the opportunity. The second big thing we need is just the will and the ambition of the operators. And I always find in a lot of these conferences, everybody always starts talking about what somebody else must do. Okay, so of course I can start by saying the regulators must do something, but we also need to do something. Yeah. We need ambition, and we need drive, and we need focus. Take some time to build these businesses, but in the end, you have an amazing combination that you can make a big difference in the lives of everyday people, but it also supports the business objective. Because customers who are using mobile money, they stay longer on the networks, they don't churn as much, they can buy their airtime using mobile money, that saves some of the commissions. So, and it's what I love about the industry is the business objectives and the social objectives are so so much overlaid. And then I guess the final thing is, as we move forward, it's then also about bringing in the more advanced services. And there, you really need to get customers onto a basic data-capable device. Then a whole new world opens up. And there, the challenge right now, if I look across our markets, and we serve almost 230 million people across the 21 countries, it's actually not so much the coverage anymore of the network. The real limiting factor is the handsets. You know, we celebrate in functions or occasions like this that you can get a $50 smartphone. In my markets, $50 is a lot of money. You know, these are customers that are earning maybe $100 a month. They're already spending $5 on basic telco. You know, even at $5 a month, it would take almost a year. You know, so it's still too high. And the point I was making at the other conference is, in many markets, there are very high import duties on handsets. And you can't really motivate that's to protect the local handset industry, because let's be honest, there isn't one. And the second thing is, you can't really motivate that it's generating a lot of money for these countries, because most of the handsets then come in as grey imports. And I think if we reduce that, you would more allow the operators also to participate in the handset market. And then a lot of space for innovation opens up, bundling the connectivity, the subscription, etc.
Thank you. I'm going to go to Safaricom. Sandra, can you talk, I mean, you know, M-Pesa and Safaricom are the shining lights of Africa when it comes to talking about innovation and financial inclusion. What are the, I mean, what were the barriers you got past, and what are the lessons learned that you'd hope to see in other countries? Because I imagine it's good for business for yourselves as a company, because you can move to more countries beyond Kenya and beyond East Africa.
I think Rob highlighted quite a few of the barriers, but I just want to sort of, yes, go back to some of those and then just talk about the history of where we were with M-Pesa. I think, you know, other than what Rob has mentioned, which is essentially, you know, handset prices and that sort of thing, I think one of the key issues around you know, financial inclusion is actually, if I want to take it from a gender lens, the fact is that women and girls access mobile very differently, and yet financial inclusion and digital inclusion is critical to moving forward and advancing sort of the lot for girls and women. So a lot of this is around addressing cultural barriers, financial barriers, and the way that people use phones. Another key thing, actually, I also think is relevant content. So as has been alluded to, it's great that you start off with a basic handset, but what are the things that are going to drive a consumer from, you know, moving from a feature phone onto a data-enabled phone and going onwards? There's got to be a lot more relevant content in terms of what we provide for customers to keep them on networks and keep them using data. So this really means looking at the mobile money ecosystem and see what it does in relation to agriculture, to health, to education, and, you know, continue providing and growing that value across the ecosystem, because without that, you get stuck with, you know, one product, but you've got to overlay it with how mobile and financial inclusion permeates the daily life of your customers. So customer insight is very critical, but I think for, you know, a lot of the economies where, you know, well, Kenya, for example, and many developing economies, you've really got to look at what are some of the gender issues and the barriers around usage of mobile. I think I can't underscore the importance of a stable policy environment for where the industry is right now. You know, we've just had taxes imposed on mobile and, you know, all of that a few weeks ago, and that really sort of disrupts what you feel is progress in the industry. On that. So I think that's really critical. But if I go back to what has been some of the drivers of the growth of M-Pesa as a product, first is we had the unique situation where the product sort of evolved before the regulation did. And because of that, we actually shaped, to some extent, the regulation around mobile money. I think globally, perhaps, actually is the issue. And that's been fortunate, because we've seen a lot of challenges in a couple of other markets where it hasn't been that great and it hasn't been that easy to understand, you know, the differences between mobile money transfer versus traditional banking and what the opportunities are around that. So for us, we're very fortunate in that. I think also having the opportunity, because I don't want to look at it as a challenge, the opportunity to serve a country where there was very little financial inclusion and very very few opportunities to link mobile to health, education, agriculture, and other critical things really has driven the uptake and the use of mobile money for us. So I just want to go back to your term around barrier. I think the greatest challenge for all of us is to look at these barriers opportunities. And I think with innovation, with hopefully a supportive policy environment, we'll really be able to drive what mobile can do for inclusion as a whole.
And for the last mobile operator in the room, Ameleta, what are the lessons from Orange generally in the region?
So we were greatly inspired by what Safaricom has done in Kenya. And as you know, Orange is present in 20 countries in Africa. And we thought in 2007, we're not in that many countries, but we thought that it would be actually a great opportunity because, as Rob mentioned, we already had the infrastructures, we had the distributors, we have the customers, we have the handsets. So this was a great opportunity for us, and we actually jumped into this, and we're very happy because 10 years later, we have 38 million customers around Africa, and most of them are using that on a monthly basis. So it has been a great success, and customers are actually really looking to have this product more. Just let me give you a quick example. Back in Senegal, which is the country where I'm from, we had 3 years ago 300,000 customers active every month. 3 years later, 1.8 million. So this huge jump was thanks to first, as they said, like big needs of the customers. Second, because the central bank quickly identified that it would be a great win for them because of dematerialization of cash, because of fraud, to avoid fraud, for better security. It was also for them to be able to track the data, to have statistics about the informal money that was going in the system. So they've been very supportive. So when we talk about regulation, I agree. They have to be forward-seeing, and the Central Bank of West Africa has been like this. One of the key lessons that we've learned in the past years is that when customers feel the need, it's really easy for them to go for it. So we try to make our product as intuitive and easy to use as possible. We have customers who don't know how to read and write, but they still need to know how to use numbers, right? And they do use that. And a lot of them are actually now moving to the app because the app is even more intuitive. So we are moving from customers who are using basic handsets, who now see the need of using data because it makes their life even easier. So we are actually pushing them to use the app, and we've seen an increase in the number of transactions they're doing on a monthly basis. Partnerships have been very important as well. Banks have a mixed feeling about us, right? Sometimes they consider we are enemies, and sometimes some of them are actually very visionary because they see that we can do partnerships. For example, we work very closely with BNP Paribas, which is one of the big French banks. And you can do bank to wallet and wallet to bank, which you can do with most operators. But we realized that what customers do that, they upsell, even for the banks, there is an upsell. So customers do more transactions, which is bringing more revenues to the banks. And for us, it's even better. It's a way to avoid churn. So we are learning to work with our ecosystem, not only the banks, but also the regulation, but also startups. You have a lot of startups who actually need to recollect their money to have mobile money payments. And thanks to that, they are able to have more money, more of their money every month, and that generates revenues for them. So they are also pushing to their customers the fact that they're using mobile money. So the ecosystem right now is very big. So the last thing that actually is really helpful, and this is us branching out into other businesses, is, for example, energy. So as you know, in most of the African countries, between 80 and 50% of the countries are not don't have access to the grid, to electricity. So what do we do about that? It's a big opportunity, as Mr. Sanda mentioned. It's a big opportunity. We don't see it as a barrier. We see it as an opportunity. So we started to provide solar panel kits. And to be able for people who make less than $100 a month, or sometimes even less than $50 a month, to make it available, because sometimes it has batteries, it has charger, lamps, even a radio, we make it easy to pay by installment with the mobile money. So over the 2 years, 3 years, you can do that. So this is also bringing some people into financial inclusion and bringing some new businesses. So it's a lot of barriers, but we are trying to overcome them with the ecosystem, with the regulators, but also by providing needs to people and to be able to provide them with the fundamentals.
Are you finding, like, and this is a question for all of you at the phone companies, are you finding that mobile money or just just e-money, whatever we call it, doesn't just necessarily sit within the system, but perhaps gets people to open actual bank accounts as well? Is there any impact on the sort of more traditional financial system, or does it just stay within the system? I don't know if have you noticed any of that?
So what we would say is the customers, we are targeting customers who've never been customers of banks right now. So this is the core of our business. Yes. But it doesn't mean that in the future they won't need banks, right? So they're starting with the basics. They're starting to trust the system. It's better than putting the money under the mattress or in the wrap. So we're changing. We're moving from totally informal to first level of formal. And I'm sure in the coming years it will be easier and easier for the banks to target these customers. When they see that when their needs increase, they're starting businesses, and now they are more than the level that the central bank allows, because there is a cap for transactions. This is where they will need the banking system or the microfinance system. Also for loans. Some companies have launched microloans and micro savings. We've actually launched it as well in Mali and in Madagascar. But this is microloans. If you need a bigger loan, you will have to go to the banking system, and this is where actually this is your first step into this one.
Okay. Yeah, I would very much agree with that. I mean, I think we as telcos, I think we're basically competing with cash. That's also what we consistently say to the banks. And in the end, customers are, if I look across our markets, the average, float amount on an individual customer's account is maybe $10 or $15. So what we do basically is we aggregate all these millions and millions of customers, and this float account then goes back into the commercial banking system. We're not holding it ourselves. So I think the mobile money ecosystem is good for the customer. I think it's good for the banks. And over time, as those customers, as their needs grow, they will move into the formal banking system. And I think in Kenya, there's also some, data around that.
Banking, yeah. Yeah, so I think what I just add is I totally agree with Rob. What mobile money is competing against is cash. If I'm not wrong, at least in Kenya, 90% of transactions are still cash-based. So there's so much pie left to take over on this. But I think the critical thing is where we've moved beyond mobile money transfer into loans and perhaps savings, then you partner with a bank to enable to provide that type of financial service, because we remain a telco. So to some extent, we are bridging that gap into going into formal banking. But from there, the bank really does take over. But just to reiterate, I mean, as phenomenal as all of the mobile money transfer products are, the fact is cash is still king, and that's where the opportunity lies.
Rose, you want to come in?
Yes, thank you very much. And hello, fellow women in the room. You are far away, I see. So first and foremost, let me just quickly address that issue of women and just dispel the myth. Women actually have better credit scores when they do become part of the financial system, because they pay their loans off quicker. They tend to use and save, maybe because of the hunter-gatherer situations that we came from in Darwin days. So women are not a higher credit risk, and so therefore the opportunity to bring women into the banking system and the financial inclusion system, I think, is very real. So that's the first thing I wanted to say. And then secondly, I think it is quite important, the point that was made by my telecommunications colleagues, that it is still about cash that we are talking about for financial inclusion, and that store of money through the money accounts is very important. But what we are not talking about beyond the cash scenario is really the job creation scenario, because for me, financial inclusion and responsible financial inclusion is not merely about banking the unbanked. It really is about social inclusion and making the invisible visible, giving our people, and I come from a consulting company where we are trying to put business and technology together, especially digital technologies, company is Accenture. And what we really need to do is we need to use digital technologies to expand the digital footprint and use the digital footprint as a way in which we can create jobs that not only helps with money, also helps with loans, et cetera, et cetera. And I think that the telecommunications sector has done a fantastic job to start bringing people into the fold. But if the cash itself cannot create jobs, if the cash cannot be used for young people to start new businesses, then we are all going to be suffering from the consequence of a digital technology coming and taking our jobs instead of us working with digital technologies to create more jobs. And I think the financial inclusion conversation has to be more than just about banking the unbanked, but it also has to be about creating jobs through a process of a financial system and the data that it has and the digital footprint that it can create for people. Just my final point, just latching onto what Sanda was saying about, for example, farmers. Farmers are micro enterprises. Very few people are looking at micro enterprises for the financial inclusion that they require. They live on less than $2 a day, for example. But the opportunity to provide a service to a farmer who is going to be one of the people that is going to be feeding the next 8 billion people of this world is phenomenal. If we can provide them financial services, if we can understand what the data says to provide them education, I think that we have an opportunity to not just create financial inclusion, but also create economic growth. And that's ultimately, I think, what we are here for.
Yeah, I think in that same World Bank report, it referenced 95 million farmers in sub-Saharan Africa alone as an opportunity for financial inclusion. I want to bring James from Dalberg in.
Thanks. I think we're having a great discussion about financial inclusion, but we tend to I am shorter than I thought I was. We tend to, and I guess it reflects kind of what has worked in Africa. We tend to very quickly zero in on the payments component because, to their credit, many of the mobile network operators on the continent have made traction on the payments ecosystem, Safaricom being foremost among them. But ultimately, to be financially included, you need payments, you need savings, you need credit, and you need insurance. You need to be able to manage risk. And frankly, once you add up all of that, virtually nowhere in Africa have we gotten beyond a trivial level of inclusion. And the challenge is we know we're going to have to do that using technology. But unless we're much more open to recognize that it's not just about one fixed pie, and I think in many countries you're seeing regulators and other actors behaving as if, well, the payments thing is all that matters, and yet it's the beginning of the journey rather than the end, we're going to continue to kind of fall short in that space. And then related to that is you cannot really do insurance, savings, and credit to any level of rigor unless you have two other pieces of what I think of as the digital stack or the makings of a digital state. One is identity, and really investing at the collective public good level in knowing who is each person. Yeah. And the other is asset registries, right? And moving beyond and leapfrogging paper in the same way that we have in the payment space and with mobile phones, how do we begin to leapfrog ahead in terms of recognizing who owns what? And frankly, we're seeing in other parts of the world, of course, India is leading on the digital identity front. The question is how many African countries will catch up there? And then how do we have a real conversation on asset registries? Because once you really can demonstrate that you own what you own, you are who you are, it becomes a lot easier to inexpensively lend, borrow, and insure. And unless you have those three things, the payments piece is just the beginning of a much longer journey. So I think there's a challenge for us in terms of how we bring others into the room, how particularly from a telco perspective we convince people that payments is just the beginning, and no one needs worry. There's lots of work for everyone to do. And then finally, how we actually make those big public infrastructure investments, which are as critical as far as infrastructure is concerned as road and rail, is identity and asset registry, none of which I think are rising to the level of priority that we should be seeing.
You come in?
Yeah, just to build on what James said, I think particularly around digital identity, but also with asset registry, huge opportunity, but also a challenge to make sure that the right privacy rules and frameworks are set in place to make sure that governments don't misuse the digital identity, and it's going to be a very interesting challenge across the continent.
Yeah, I think that's one that we should dig into a bit more. But before we come to that, I wanted to bring Jeremy in from Andela, just talk a little bit about, because it's been mentioned already, just the opportunity for startups, technology companies in this space. And I said earlier that fintech is just in terms of the areas of startups on the continent that's been supported, it's got, I think 35% of the funding over the last couple of years. What kind of better support do African startups need, particularly when you're thinking about this space and trying to support it?
I appreciate it. I appreciate it a lot. And I also really appreciate Dr. Phillips' point earlier about the need to add jobs to the discussion here. When you look at the sort of full tech stack, James, that you mentioned, I completely agree with its importance as a fundamental bedrock. But then jobs, and in particular high-paying jobs at scale, are then the critical next step in being able to actually build something sustainable. And for those who aren't familiar, Andela identifies high-potential young people in their mid-20s across sub-Saharan Africa and trains them to be software developers. And there are two parts of that that are important. First is identifying and training, but the other is then where they work. We connect them with top-tier global tech companies where they're able to work as full-time team members without having to leave their home country. And what's important there is you're taking not just the value of the training, but you're also then amplifying it with global markets and bringing hard currency into the country at scale. And by doing that, what that does is take advantage of something I think is often missed. Yes, Africa, as was mentioned, is the youngest continent on the planet. The youth of Africa, they absolutely demand to be part of it, but they are part of the solution. Like, we're moving towards a world where it becomes obvious that brilliance is evenly distributed and talent is evenly distributed. And in that world, we also don't care as much about where work is done. And in the same way that East Asia was able to leverage manufacturing in order to grow really rapidly over a long period of time because it created a large number of high-quality jobs, the same thing is possible across Africa as a result of that talent. And so from a startup support standpoint, Yinka, I have to say, if I were a 20-something-year-old thinking about starting a company anywhere in the world, especially if I were technical, sub-Saharan Africa is where I'd want to be right now. And yes, there are certainly regulatory challenges and sort of clarity challenges around things like ownership, as James mentioned, but I think of this as an incredible time and place for the continent and an opportunity for young people and for job creation through startups that is unlike almost anything that's ever happened in the history of the world. So there are ways to improve it, but I think from an outset it's important to look at just how incredible this opportunity is, and it's why I'm also so excited about Andela graduates as they finish and begin launching companies, as we've started to see, and already gaining a bunch of traction.
Okay, that's awesome. By the way, if any of you want to just jump in, just indicate, and I'll come to you. But yeah, just to stick with just the opportunity and startups and how regulators may help or not help these. I'm interested in just sort of, because at one point when I first started this job covering innovation, it felt like every week I was writing about a regulator in some country. It was the one thing that was common across all countries, that there's certainly a concern with digital technology in particular about this lack of control. Like, you know, I could shut down the newspaper previously if I didn't like something or whatever. So there's this whole sort of a lack of control that really concerns governments and regulators. I don't know, does anyone have any insights on how we can address that? Karen?
Yes, with Millennium Challenge Corporation, and we have a mission that talks about incentivizing reforms to be able to support economic growth. And in communications and technology in particular, we are embarking on a program in Togo where, and I think it applies across the portfolio of African countries, and establishing an independent and strong regulatory framework that is often distributed, the authorities are distributed in different ministries or government agencies and not necessarily consolidated in an administrative way, that the skills to be able to perform the regulatory function are organized to support the financial and the technology inclusion. And some of the things that are important to that is, in our case, in our project design, is establishing things like a universal service fund that would be able to collect monies on behalf of all operators competing in the marketplace to provide universal access across the country. And as we know, access in particular is a fundamental problem, both in participation of women into the formal economy, and then certainly young people who are establishing that communications is the way that they will participate in the economy in general and be able to transact. So again, the regulatory framework is just foundational, and taking it a step further is making sure that we're thinking about consolidating those functions into one set of authorities that are able to organize and be able to support the function as a whole on behalf of universal access for everyone. And then maybe in our case of being able to support those kinds of ideas, be able to introduce new licenses into the marketplace for operators who want to compete, even on small scale, situational or regional basis and so forth. It just gives that vehicle to be able to apply for those rights and to be able to be in the competitive marketplace.
Nice.
Yes, first, my apologies. I was hosting a meeting at the UN under Colin Kamalia. Just something about regulators. We have a challenge that the role of regulators has been cast in a negative light as an inhibition to innovation, with some justification. And that some early starters had the benefit of flexible regulation. I'll give an example. I was a minister in Kenya when M-Pesa was legislated. And what happened at Cabinet? We were ready to take a risk of authorizing something whose consequences we're not totally sure we will manage. Luckily, it also meant that we were registering M-Pesa before commercial banks knew what it was going to do to them. Now, part of the consequence of success of fintech has been either commercial banks also going digital or resisting where it has not been deepened, the growth of fintech. M-Pesa has given a bad name to fintech in some countries, where banks gang up against this. Now, that gives regulators a bad name. But if you look at their side, there's only a certain limit to which fintech can grow without growing the capacity for regulators. I think globally it has been embraced that even the big giants have to bring the regulators along to understand their role. The challenges of competition, concentration, and consumer protection are not possible to surmount without growing the competence of regulators. And the privacy laws and fight against hacking and so on requires that pari passu to the innovations that are happening in fintechs should be innovations in the management and among regulators. And I think that's the side of the story that we have not been saying enough.
That's a really interesting point. So you're saying that I mean, and I don't think this is unique to Africa. To be honest with you, I think this is an issue with regulators all around the world that I mean, just we're in this moment in history where the technology is advancing so rapidly, and things are changing so quickly that the people who understand it the best aren't working at regulators, and that's we need people who understand this and understand the opportunities better. And I think that's an important point. But I also think that we see the changes in from one country to the next, and I think Rob should have made that point earlier as well, that some countries are more protective there and open up, and I can guess which ones you're referencing there. Did you want to come in, sir?
Yeah, I mean, I would like just to add on a couple of opportunities that we think we are not looking at. I mean, James mentioned about the issue of going beyond the payment. And I think the focus on trying to get more women involved, it's very important, but we might be missing the big picture. And the big picture is linked also with regulation, and you're right on the leadership that I think your former governor of Central Bank in Kenya took the risk way before many central bank. But the regulation is not just in our country, it's globally. If you look at what's going to happen with Basel III and everything with the banking sector, are we as African, are we following these rules of Basel III? Will that affect the level of liquidity in our system? Because the issue of credit is still a key element for Africans, and we are following some of the rules at the global level or might not be so applicable to our reality. It's also about the size of our GDP. I mean, all the countries now are rebasing their GDP, and the opportunity on inclusion is also by using data to really know the real size of our economy. Because I don't think we are there. It impacts the level of debt that we could really afford as nation, and how we need to grow faster. But I think one element that the Concordia can put into the takeaway of this discussion is what also this inclusion mean in terms of integration of African countries. The way our economy is framed, the size of our economy doesn't make sense. And as African, we have been ignoring this issue. We have our borders, it doesn't make sense. So you're talking about telco, we're talking about the financial institution. The way we organize and our countries have been designed doesn't make sense. So how do we use financial inclusion, technology, to erase those artificial borders that we have? I don't think we are doing enough at that point, which I think will be transformative if we manage to face all these issues. So those are a couple of points that I think will be good to keep as our takeaway, beyond some of the successful things we are doing in terms of inclusion, the gender lens that you have talking, but I think there are broader strategic issues that I think we can focus on using issues related to financial inclusion, technology, and data to really get the big picture on the African continent.
Someone raised the issue of competition in markets, and I saw a report the other day which talks about the more competition there is in African markets, and I imagine this is again not just African markets, but the lower the cost of data in those countries. Yet at the same time, and I really appreciate someone to explain this to me, I also get a sense that mobile money is reliant on a kind of networking effect of more people coming on board, and you having, it's just to your point about the removal of borders, like more people being in the system, so it probably makes a lot of sense for Safaricom to have a huge market share, for MTN, a huge network. What happens in the smaller countries where there's one one network. Does it still work? Does it still make sense? James, do you have some thoughts?
Well, I think it ties to something, and I'll tie to something Dr. Kitui said, which is if you think of the world as having a bounded set of defined products, and once those are defined, then there's nothing more, then yes, you should be trying to capture the available markets and own them yourself. Right? The problem is we're getting so caught up in mobile money, which is financial inclusion 0.01, that no one is asking what would be the effect on the banks of lowering their cost of cash handling and their ability to offer more sophisticated services, right? How do we actually get the savings and credit and insurance penetrations higher? And so everyone is so convinced that the thing to do is chase the pool of value that they see. So they say, hey, here's how much Safaricom has made from M-Pesa, let's go after that pool. They're not asking how much value was unlocked in the broader Kenyan banking sector by the existence of M-Pesa. And as long as we keep on doing that, you end up with situations, and I'm not going to name names here, but the problem is not so much unsophisticated regulators. It is that you have short-sighted incumbent businesses that are fighting to protect the status quo.
So they're lobbying.
They're lobbying against something that obviously is good for the country because they think it's temporarily bad for their balance sheets.
Yeah.
And I don't know how we get past that.
Okay. Ron, do you? Sorry. Let's go on.
Yeah, thanks. Happy that you've raised the issue of competition, especially in a panel that talks about financial inclusion, because most competition tends to be on the low-hanging fruits, if there are any, and forget about those who needs to be included at the end of the day, right? Because those are harder to reach. Just as a way of background, we are a venture capital firm that invest in disruptive, innovative companies that provide primary products and services. And many people, when they hear when I say disruptive, innovative, especially in a setting like this in New York, thinks about high-end, costly technology. That's not necessarily the case, right? We are competing. The companies we invest in are competing in life hacks. So you need to be affordably appealing to our customers. And when you talk about inclusion, in my opinion, you need to be connected. So there are telcos here, and obviously they've done a great job in being connected. But if we talk about jobs, as Jeremy and Dr. Phillips said, I think the next layer, and Aminita has mentioned it, is energy. And this is not necessarily the example that I wanted to bring in terms of our portfolio when I thought about this panel, but we were one of the earliest backers of Lumus Global, who had a great partnership with MTN. And the reason why they have been so successful in Nigeria with Ferdy's team, and now expanded last year to Cote d'Ivoire with Freddy's team, is because from the get-go, they build a product that is affordable to the consumers, but also makes sense to a company like MTN to strike a really strategic partnership with them, and took a bet on them when they were very early young. Now, the mobile operator have been very successful because landline-based pole, we talked about leapfrogging, right? Landline-based pole became mobile, and the same will happen with the electricity. Now, after Jeremy finished educating these high-paying, high-potential young people, and they're going to their high-paying jobs at the multinationals, and now they want to go into entrepreneurships. How can they do that without electricity, right? So you need to move into further down the ladder of productive use and cost savings. And what we see in terms of venture capital, which is not really widespread in the continent, especially not 10 years ago when we started, is that, as I mentioned, in terms of competition, bringing it back home to the point, many people tend to either compete heads-to-heads with M-Pesa or try to go to those who are really connected and left out those who needs to be included. And the next wave of innovation will be those who are able to capture and bridge that gap.
Yeah. Oh, yes, again, as we're talking about internet technology, I see that internet technology is not necessarily only money transfer, but there's many things that can go with internet technology. And then this is where I am coming from, especially people like us, ordinary people. I don't know high-level talk. I just know ordinary level talk. We look at our community and then we see, oh, there are people here, they cannot connect to the internet. They don't have any money to pay. The technology is there, but they don't have any money to send emails, to get some email attachment with education material, or to get email attachment with sort of medical information or Wikipedia or something like that. So all those are part of the internet technology. And then looking at the community, people like me, an ordinary person, I say, oh, I want to help these people. How could they be connected? And then I think, oh, they have to have a tool. And then I'm looking for that tool and I cannot find it because most of the tools that I could find is very expensive. I say, what can we do to break this down so that the price will be available for all these people? And then we start building up something. And then I build something like this. It's a server. And it's a server that connects to the mobile, but it is offline. But people can, with this server, the idea is that 100 people in a village will pay $1 a day and then send as many emails as they can on $1 shared by 100 people. That is the idea. And this is our prototype, and it's working. And then all of you here in the room, if you look at your cell phone, you're gonna see the network is, you have it there with your cell phone. It's working, just to prove it. So the reason I'm talking about this, we have a problem. The barrier that we have is that from us people down below, I'm not an engineer, I'm an electronics technician, just a technician. And I thought about this idea, but within me, I brought friend engineer from Microsoft, not official Microsoft, but just friend engineer who work with Microsoft. They came, and then we built this thing together. But now, to get funding, to get that connection with the government, to get connection with the funding provider, to get connection with the telephone company that can take advantage of this, it is difficult. This is the barrier that we have. So, so I wanted to say that for now.
You're in the right room. so much take this.
So I see Dr. Kitu's hand up, and I always like to speak after him because then I can summarize what he says and then I can go on. But so I'm speaking representing Afro Champions, and I like to touch on something Paulo said as a fellow Afro Champion compatriot. So Afro Champions grew out of the idea we have that there are a lot of successful case studies on the continent. We keep beating ourselves up as looking at all the reasons why things can work, and I think we should be very cautious when we're looking at innovation, technologies, and look out for things that work and look at best standards. But also there are things that work, and there are things that people are championing on the continent. There's so many things we couldn't have dreamed about happening on the continent in the last 2 decades. We've seen the emergence of African multinationals that have grown in leaps and bounds, that are integrating Africa's telco markets, African financial markets, in ways that nobody would have thought of 20, 25 years ago. We've seen MTN in 20+ countries, EcoBank in 33 countries, literally integrating 33 financial markets and breaking existing barriers and moving people, goods, et cetera, et cetera. I think that the greatest barrier to us is ourselves. It's our inability to think out of the box and see walls and stop, and just say, how do we get beyond these walls? And so what we've tried to do as Afro Champions is look at those who, through their cross-border operations, using digital ICT as a tool or an accelerator for basically integrating the continent, because this is a continent with so much aspiration to catch up, to integrate into the world, but cannot figure out how to integrate itself first. There's a continent that has this desire to move SMEs and local people within communities along its value chains, but doesn't even have the infrastructure to do that, and sees ICT, or if you like, technology. So money circulates, as we all know, in asset management, in finance, in banking, in pensions, and all of the things that we've spoken about, the need to extend all these services to welfare, and all the things that within people's social lifestyle, they find themselves using money. But the truth, again, is that If I earn $25,000 a year in America, I live below the poverty line. If I earn that money in Africa, in fact, if I earn $1,000 a month in Africa, I'm pretty rich in my village in Africa. How do we use the appropriate technologies that Dr. Jabu spoke about, where we are not so much in a hurry to catch up with a world that requires so much infrastructure, so much investment, et cetera, but take what champions have done when they decided to break barriers, when M-Pesa decided to just do what he did, when MTN decided to venture into the countries, the economies that nobody thought they could, and managed to move so many people into, and look at more of those examples and use that as a model. What if we had a whole Pan-African, if you like, regulatory, because there are some countries that it's working. How can that be the standard for the whole continent to sort of fashion itself after? So these are some of the things that we are very interested in, identifying not all the reasons why things that work, looking for the reasons why it's working. And like James said, if there's a way we need to get around it, that's the problem we need to fix. Let's look on the continent for who is solving that problem and let that become the model. So thank you again.
Yeah, the previous point about the mindset, I look at the notion of sort of a fixed versus growth mindset as being a really important point that's often missed as it relates to technology and financial inclusion, as opposed to previous or at least older industries. I think there's a natural tendency for folks who have significant experience in older industries, this could be regulators, it could be folks in business, to assume that there's a finite supply of resources and that wealth creation or value creation happens as a result of finding some form of access to those resources. And I see this happening pretty frequently in the tech world also across the continent in a way that is a material challenge for the people who are involved, what it misses. And I think there's a lot of discussion about how do we recreate Silicon Valley? Like, how many times have folks heard, how do we build our version of Silicon Valley? How many folks are also saying, okay, what Silicon Valley did was convince the smartest, most driven people all over the world to come and try to build things there? How many people are also saying that? Rwanda actually is doing it really well. But not that many other countries are saying, we want to encourage immigration from around the continent. We want people to come and build and be part of our ecosystem. How many times have folks heard people say, oh, well, why is this group getting venture capital and this group not getting it? The reality is, if one wants more venture capital, you want to then see some exits. You want to see venture capital being successful, because that will then beget more venture capital. Success begets success in tech. And that is a mindset shift in the world of technology and data and financial inclusion that is fundamentally different from the traditional or old world economy that is missed by people on every rung of the ladder, and a huge impediment to being able to build a Silicon Valley or anything like it, but would be something that is something we should talk about more.
Okay, thanks. I'm going to bring in Mickey because I haven't heard from you.
I've had a few points to say on all these wonderful contributions here, and I will ironically centralize them around one theme, which is decentralization and blockchain. I haven't had that. I mean, we know it's prominent here at the event and hasn't been spoken once here. And to me, I've spent a very limited time in the continent. I lived in Ghana for a year, and we have a peer-to-peer banking network in Ghana and Senegal, and I've traveled to about almost 20 other countries. And one of the patterns I've noticed that I've walked away seeing, to Jeremy's point and other people's points about youth, is the greatness I see in Africa. It's the youth. It is women, so I think that is the broad issue. And it's community, this idea of people that take care of each other, and there is this structure there. So when you have a technology like blockchain, it allows for all the many points I wanted to raise. It allows for these kind of people now to coordinate. It allows for more, a better environment for regulators, right? It's one thing for them to look at the data of mobile money from a telco. Mm-hmm. And I'm not saying telcos would do the following, but they could technically manipulate the data, right? When it's on the blockchain, you cannot do that. They can look at it in real time and no one can ever touch it. So if a regulator is authentic, it's a much better environment. When we talk about competition, which I think is the answer to innovation and working towards better wealth inclusion models. You want people experimenting and failing and succeeding on something as specific as this group of farmers need this type of product. And when you have centralized banks or even as telcos offer more financial services, just by logical definition, they won't be able to innovate as fast, and it'll never be a tight fit to every little individual on the ground. You can have an environment where people can come in and provide those kind of things. And then there's this idea of wealth inclusion now and wealth creation, right? That like life is usually not, and we're all used to this conventionally, whether it's sometimes in Africa now or how people economically grew in the States back to the Rockefeller days, this idea of scarcity and resources and that life is a zero-sum game. For me to become more rich, there's this pie, and M-Pesa discovered something great. I must replicate M-Pesa. I must take from M-Pesa, right. And that's not the answer. So blockchain also enables these economic models that are kind of a non-zero-sum game, right? These ideas now, you can literally tokenize as an asset a goat, right? And you can now collateralize that or sell a piece of that, and that's just one tiny example. As data comes, which I think is very important for smartphones, and people to use more things, people are still pretty poor because it won't happen overnight, getting to wealth inclusion, and data will become another thing that they have to spend money on. What blockchain could do is could allow everyone to kind of co-own the revenue from their data and monetize that. So maybe someone like all the telcos get together and call that data, but by coordinating on the blockchain, you can go 20% of this revenue. Now they're monetizing this, so automatically go to the people. You can do IDs and start to eliminate the needs of borders as much. And again, and using platforms like the telcos, which are just phenomenal, to just create new and more value on top. And I think that this technology is, I'll end on this note here, it's looking for a home, right? It's looking for a home, and we talk about leapfrogging a lot here all the time. And when I hear the word leapfrogging, I don't think it does the opportunity in Africa justice, because leapfrogging is about skipping something we did to catch up to where everyone else is. And blockchain is waiting for someone to become a leader to have this 4th/5th industrial revolution. And I just know it's the continent. So maybe the takeaway again could be talking to regulators about sandboxes and ways to have people innovate around this.
Okay, thanks for that. Rose, you wanted to come in quickly?
Yeah, actually, when I came through customs, there was a little child, and he said, "You sound like you come from Wakanda." I was very proud to hear that. And it sort of goes back to what Mickey is saying, that I also do believe that Africa is the continent where things are going to happen. It is the place where we started the statement that it takes a village to raise a child. And we say that because we believe in social inclusion, in inclusive economic growth, in growth that only happens when academia, consulting houses, tech startups, telecoms, banks, et cetera, all come together and solve the problem. I think the other thing for me that's a little bit distressing is that we use the word smartphone. And we should probably never have called it a phone. We should have called it smart something else. Because I think in there sits, for me, phenomenal gold that the people of Africa can use to be able to solve some of the problems that needs to be solved. And it doesn't matter if you sit on the side of the road to do that. Alvin Toffler said that the future belongs to the people that can learn and unlearn. And it's not the ignorant that cannot write or spell. It's the people that cannot learn or relearn or unlearn. And I think that children, our children, and anybody else actually in Africa, we are concerned about illiteracy, and we are concerned about money. I think the answer sits in data and information. I think that the information that we can provide people on which they can build the innovations of the future is really the currency that we need to unlock. And I would ask everybody, whether it is regulators, governments, academia, telecoms, etc., if we can solve that problem, if we can make data and information available through some sort of asset, a smartphone, to any child in a village in Tanzania, we will see amazing things happen on our continent.
Come to you, Peter.
So just to build on what a lot of you have said, you know, if you go through the framework of financial inclusion that we've filled in over the last hour, you have jobs in the economy, you need people to be making money to have finances to be connected to. Then you have this tech stack where you need smartphones, data connectivity, identity, asset registration, and then you need products and services to be delivered through those pipes. And if I look at that ecosystem, I mean, I can say that running a venture fund that's focused on Africa, there are a number of smart entrepreneurs that are solving each of these problems in many different countries across Africa. And one of the biggest issues that I see is how much support those entrepreneurs are getting from venture firms, from governments, from large corporations who would probably be best served partnering with those young institutions. And I'm pretty excited about what I'm seeing, though, because a lot of these issues have been solved in other places. If you look at India, as was mentioned before, or you look at China, I mean, just look at what Alipay, WeChat Cash are doing. I mean, that's a digital banking system that the entire economy is connected to. And, you know, if you look at the agent networks that MTN has in Nigeria, I think it's like 600,000 agents in Nigeria alone. Like, there's a banking system right there. And I think a lot of, you know, to Jeremy's point and others' points, there's a entrenchment of interests where people are focused on how do I protect my piece of the pie versus how do I make the whole pie bigger. And so I think while increasing competition is important, I think increasing cooperation is also going to be really key. And how do we create investment and business models where we can all win based on the economy in Africa growing, more and more people connecting to that. And I'm optimistic for what's happening, but I think that more people, especially in some of the older industries, need to look to what innovation, you know, people like Mickey, people like Jeremy are doing and see how can I be a part of this instead of protecting my own piece of the pie.
Fantastic. Evans?
I just want to touch on something else that I think is important to consider. How can we be able to use technology and data to help inform decisions? So I think it's something that is not being done as much. For example, you can be able to analyze and see how much people are consuming power, for example, and then that should help governments prioritize which sectors or which specific geographical locations where they need to invest more. It's relevant to have, for example, a high power line going into a location where you don't have industries, or where the economic activities can't support such kind of infrastructure. That can happen in terms of roads, even in agriculture. So that's something that need to happen more. And this can happen by the private sector being able to participate by enlightening the government, creating awareness to the government so that they can know that they can be able to make more smart decisions. And then in Africa, we also need to own our data. I think we're doing very little to be able to own the data that we're collecting. We should be able to build our own data storage facilities on the continent so that we can be able to secure the data that we're generating. Okay.
Samba? Yeah. Thank you. I think we're talking about barrier of financial inclusion, technology, and all that. The main challenge is now we need to work about to ensure proper internet coverage for the continent, because that's something that's at all levels we need to talk about it and take clear action point, because we're talking about financial inclusion where like 80% of the population living in a rural area with no energy and most of the time no 3G or 4G coverage. So I think we need to have a multi-stakeholder approach
on the continent where partnership with telecom operators, governments, private sectors, and infrastructure operators, and mainly also content provider, because we have a lot of startup coming up in Africa. So we need to have that approach in order to find solution about the coverage, because all that we're talking about without coverage won't happen. Nothing will happen. So in this regard, I see three key pillars for digital economy. The three key pillars for me, it's first the infrastructure. So we need to have a good mix between fiber, satellite, and ADS, like the copper that the gentleman Mabuza was talking about. So that's one of the pillars in terms of infrastructure. Also in infrastructure, we need to work on a good mix between energy, like renewable energy and conventional one. So far at ADS, the company I'm heading, we work on the continent. We did so far more than 26,000 kilometers of fiber. We connect to renewable energy more than 1,600 cities. We help build more than 4 data centers on the continent, and we are keep on doing that. It's almost, we structure today more than 4 billion worth of project within Africa. So we need to have this approach where everybody have a role to play, and especially telecom operators, because we are going from the voice to data. So everybody know that now the money will be on the data. So I think the operator, they have a key role to play in order to finance this infrastructure. Most of our country, we have this universal access fund. This universal access fund should be in a term of a partnership between private sector, government, to fund the interconnection of our continent in order to get access. Because if you take most of those operators, they will only invest in area where there is 10,000 population. So there is there's a way to work together in order to de-risk the financing of infrastructure. At the end, it will benefit them. So the second pillar of the digital economy, it's capacity building. So we're talking about e-education, e-government, but we need to train our civil servants, we need to train our students, we need to do massive training. Millions of people need to be trained on the continent in order to make that second pillar. The third one, it's the local content. We need to help grow startup. I think some of the operators are starting now, like people like Orange in Senegal. They are putting fund. Myself, I co-invest with Orange at Teranga Capital, where Orange, Société Générale, and AXA Capital. But they need to do more effort on that, because for the past 25 years, they make money, so they need to reinvest on the youth of a continent. So this is something that we need to do in order to have the three pillars of the digital economy.
Okay, thanks. I'm very conscious of time. We're about to run. I don't know if the ambassador had something to say before we have closing remarks.
Just wanted to follow on both of your comments. I do think the more Africa can figure out how to harmonize the regulatory regimes across countries, it'll make it easier on the capacity, because then they can teach each other. Two, for big investors coming in, being able to move from one country to another and get the size economy is critical. And the work that Paul Kagame has been doing out of the AU around this, I think, is an important start. And the more people get behind that, I think it will help speed up in all of these areas. And there's some very whether it's data sovereignty, privacy, issues that no country is going to give up control over, but even having an organized framework for how they think it through, and then how to train regulators. And having been a former regulator in the US, the regulator's job is incredibly difficult. You've got these well-paid lobbyists or companies coming at you, and to bet on innovation as you did is one of the hardest things to do because you're taking big risks.
Exactly.
So providing support to them as they go through that.
Okay, thank you. Did you want to come in?
I think I wanted to quickly touch base on what Rose said earlier about how are we getting children in the villages to be more connected, right? So we have a good example in Sierra Leone, where I'm based. The government has just launched a free education program. So they want to provide free education for primary and secondary schools. Orange has decided to support this through connectivity first. Connectivity, what you mean by that is that Mr. Bachili said, we have universal funds, we're contributing to this, but we really want to be able to use this money to go in remote places where we would not necessarily go because it doesn't make business sense. Yeah. We also might want to work with the UNICEF, who's providing school mappings to know exactly where to put the towers so we can provide connectivity. Connectivity, it means that the kids will have access to the internet, to knowledge. If you are a professor, you are based in Freetown, you want to be teaching a class in a remote area in the north of Sierra Leone, you'll be able to do this as well. It will be also good to gather data, right? And I think data is the other thing that we really wanted to talk about today, big data in Africa. It's one of the big things that's mentioned everywhere, and we don't talk about it that much because we haven't done so much about it yet. But there are some initiatives that are going on that are very interesting about big data. One of them is data for challenge. It's a challenge for data, sorry. We've launched it in partnership with universities in some countries in Africa. It's about how can you find good use cases for big data. So we give you anonymized, aggregated data, and what can you do about it? One startup, they found out that they could help the government for transportation and to identify the spots where you will put the routes for the buses and for public transportation. Another one is using the data for flooding predictions and for drought. For example, we know that when we have our antennas, every time there is a rain, it impacts the network. So we're able, based on the impact on our network, to know if it's raining much more than usual or if it's not raining at all. And we're able, with this, to know that if it's going to be a flooding or it's going to be a drought. So this is the kind of pilots talking about rain.
It's going to be a flood.
So probably telecom operators can give you this data as well. So these are some pilots that we're doing in Africa. But I think to go even further and use big data for health, for education, for transportation, for the public good, we need to go even further in investing in platform, in algorithm, and in skills. Talking about education, we need to have the data scientists that will be able tomorrow to crunch everything that we have, exactly, and take the great knowledge out of it.
This has been great. I was going to pass over to Dr. Kitui to give us closing remarks, and I think that will be it.
Thank you. I would have liked to talk a lot of things about the digital economy beyond fintech, but I'll invite you to come to my first ever e-commerce week for Africa in Nairobi, 10th to 14th December. We'll do that. But now I just want to talk a little bit about fintech in the context of this discussion, the little bit that I got in. One of the problems that we usually have with new technology is either we're rejecting it or we embrace it blindly, just like we did with globalization, like we've done with the electronic platform giants. All is good. But I think it's important to appreciate fintech has revolutionized finance. But fintech is not a panacea of all financial problems. Number of key considerations. Fintech makes access to credit easier, does not make credit cheaper. In fact, empirical study in Kenya has shown that while fintech has virtually killed microfinancing institutions, it has not reduced the cost of money to the micro borrowers. Significantly in Kenya again, fintech has made it possible for people to borrow money to gamble, betting on British soccer. People are impoverished because of technology makes it easy to impoverish yourself. So we should look at that as one consideration that is important. Secondly, fintech has had an impact on commercial banks to go digital in many ways. And we need commercial banks to counter any power concentration that can go with fintech, with electronic giants. Similarly, we have to look at innovative additional sources of credit for small business. To my mind, one of the more important ones is a campaign we are driving to lower barriers for compliance with stock exchanges for small businesses. You know, like listing platforms for small and medium enterprises with lower requirements at entry can unlock a lot of substantial resources that can drive small business. I have been saying this about fintech as I say of digital market visibility. Bankability does not mean banking. It gives you the possibility, but you have to grow something to bank. As we say about electronic market visibility, if you are visible in the marketplace without a product, you are a consumer, you are not a seller. And then we have to balance between possibility and building capacity to trade. When governments are competing with enterprise in credit markets domestically, they drive up the cost of credit such that people who are actually financially included by electronic financing, by mobile money, actually have no access to money. And I know this very well. We are seeing in some regions. Now, two little things that I wanted to add as I move towards the end. One, there is growing concern about concentration of power in fintech giants. But one of the challenges we have is there is no uniform history of how to deal with the concentration of power. In some countries, it's the private sector which has built the infrastructure for mobile inclusion. They have built such an advantage that to regulate and create competition for them is very difficult unless the state takes over and invests in the infrastructure. The trend over the last few years has been the big giants are the ones which are now moving into fiber optic infrastructure. But at our meeting of the Broadband Commission 2 days ago, we were wary of a new trend, which is the big platform giants are going to get out of that very quickly as they invest in the infrastructure of 5G elsewhere, not in the developing world. So the challenge is more government engagement for the next phase of infrastructure if you're going to contain the power of the fintech giants that have built the infrastructure on which they are running. Finally, I want to commend some work that has been done by the private sector. MTN and Safaricom are working together towards the creation of a single wallet, mobile wallet, for a region that has more than 15 countries. Governments are not doing enough in answering the questions of cross-border mobile money. And I think it's important that for the areas that are not covered by this, there's purposeful action on how to facilitate this. I've just come out of a meeting where we're saying, by far, intra-African remittances are the most expensive remittances in the world.
Right.
And so the poorest are paying global wallets like PayPal and World Remit and Western Union, phenomenal cost, particularly for the small migrants within Africa. Thank you.
Thank you very much for that. Dr. Jabu, did you want to say a last word?
Yeah, thank you very much. I think this has been quite illuminating. We've run out of time. I do ask that outside of here we continue to engage. Let's reflect about how to power this work using solar, other renewable sources of energy in a manner that would enable us to have effective generation, storage, and reticulation. That's a discussion for another day. But my takeaway here is we need to always know that by definition, disruption means it's going to challenge the status quo. And technology is anything that can be disrupted will be disrupted. Anything that can be digitalized will be digitalized. We need to just come to terms with that. So the role of regulation is not to protect incumbents. Regulation is to create an environment and then be a referee to see that we all play in terms of the rules and be sure that there's fairness. It's not to protection the incumbents. We also need to also know that the hallmarks of a monopoly is manifest in pricing and quality. So we must know technology knows no boundaries, knows no gender, knows no race, knows no color. So that is why it would have the ability to disrupt anything. Banks will disrupt telecoms and telecoms will disrupt banks. Ours is what is it that would make these things to be accessible to our people at the lowest cost, least cost possible. Thank you very much for all your contribution. Thanks, Inka.
Thank you very much. Thanks.